Hey guys and girls, it's Nathan Birch here, reporting from the B.Invested.com.au HQ, and today I'm answering questions in from Facebook. Today I've got a question from Daniel, and the question from Daniel is if you have had a massive kick in the ass with a bad investment, how to recover from this and bounce back stronger than ever? Now, personally myself, I haven't had a problem with my properties. I take a lot of due diligence with making educated decisions, that for myself and that for my clients. So I haven't got an example where I've had to get out of trouble on a property. I've had some which have frustrated me myself, like only count on less than a hand how many that I've had which can frustrate me. Like I had a shop that was vacant for 10 years. I bought it and it was only vacant for 8 months. Luckily enough, I got a tenant in there, but I had a plan A, a plan B, a plan C, and a plan D. I bought this block of land, this shop for 465 grand. The blocks of land next door were selling identical for 650. So I knew I bought it below market value. I knew that I could make money out of it, and worst case scenario, I could build some units and stuff on top and make profit from there. Looking at scenarios, I see people come through every day of the week which have had, been pulled in by some property spruiker, bought it off the plan, bought a service department, student accommodation, a retirement village accommodation, or a mining town type thing. And there's actually one that comes to mind, a new client to us that's just come on board, and they have purchased properties in a mining town off one of those house and land package type of companies. Nothing to do with us, but they were asking me the other day, Nathan, what are your thoughts on this property? What should I do? It's costing us 25 grand a year negative cash flow. Basically, the two properties that they purchased have gone down in value, probably about 150,000. The negative cash flow is about 25,000 a year. So my thoughts were, and I don't know your situation, I can't make a call on what you should or shouldn't do, but what you need to do is make an educated decision whether you feel that the property will go up in value. So in this scenario, I was looking at 150 grand. If it's 25 grand a year in negative, in 6 years time, that property will cost that amount again to hold. So not only if it bounces back to the real value and not lose any money, you've just held it for that period of time, has to go up double that amount to get your capital back. So as the old saying goes, if you want to get yourself out of a hole, you first got to stop digging and go back and reassess the situation and make an action plan from there. Some of the most costly education programs out there in the world is real life experiences, but there's nothing wrong with that either. Not in property investing front, but in other areas. I talk to you guys about property investing on a day-to-day basis. I don't talk to you about shares or anything like that, because on shares, I don't know what I'm doing. I played around with shares once, lost some money. I took the decision I'm going to make a loss. I'm going to move my money back into property and do what I do. This was in the GFC time, and I don't know, 24 or 25 or 23 or something like that. Buying some shares, maybe lost myself 40 grand. I was like, shares ain't what I know, it's not what I do, and I make lots of money through property investing, so I should focus on what is profitable for me and what I do best, and go and be the best that I can in that. So, it's not bad to walk away from an investment, but I'm not saying to do that. You just need to make sure that you do your numbers and make sure they stack up and take action on that. Hope that helps. We'll catch up soon. Have an awesome day. Keep the questions coming through. Facebook.com/beinvested.com.au.